Eric Muathe from Muathe.com with world market analysis for the weekend of December 10th and December 11th, 2016. Let's take a look at markets here, Asian markets. Let's see here, pretty much, let's call it a nice day. In as far as Japan is concerned, China was up. Other markets were slightly down. Pretty much, let's call it unchanged to slightly up. Let's take a look at European markets at the close of Friday's session, and I think that they were up, yes, slightly to the upside. So markets ended the week with a nice conclusion to a nice week. Take a look at US. Let's take a look at the Americas actually. And here with about 30 minutes, less than 30 minutes to go before the close of Friday's session, Brazil is slightly down. Canadian market is slight to the upside. S&P 500 is up about 0.53 and trading at all-time highs. Let's take a look at those charts. Let's begin by taking a look at the Australian market. And we can see for the Australian market, ever since it bounced with uniform activity on the 50 level, on the monthly RSI, somewhere here, now it brings the idea that it could actually be looking to break out. So this could be the next challenge, a breakout attempt above 2016's monthly closing high, and that level is at 5644.00. so the monthly closing high here is in sight, and I would suspect, since we've seen support on RSI 50, that this is actually something it's going to try and do, to take out the recent monthly closing high at 5644.00. If it can clear that resistance, then we can probably see it continue moving higher. So the monthly chart looks stable to bullish. If we take a look at China, it's slightly down the last 2 weeks. So now we have a new breakout possibility if it can break out above the recent weekly closing high. So bulls would like the market to move above the recent weekly closing high at 3261.94. If it can clear that resistance, that's great. Otherwise, we continue looking at the market here being stable, trading above the moving averages. Again, we have that crossover between the 13-week moving average having moved above the 34-week moving average. That's great. Now, one thing I would caution here is this is where it's been stalling. If you draw a line, and I'll show this, if you take this line here where the RSI is stalling and extend this line backwards, you can see that it's been a problem for the Chinese market. Every time it drops below this line, we see a major pullback. So this is 2-year weekly. Let's take a look at an 8-year weekly for the Chinese market. Draw the same line. So right there, draw the line somewhere there. And you can see that it's been giving us major sell signals. For example, resistance on this red line here for the highs of early 2013. Resistance here for the highs there. Resistance here for the highs there. And even here there was resistance of the highs there. So you can see the fact that we've come and hit this here in late 2016 could be a problem. In other words, bulls would want to see a breakout before they can play any further movement in the Chinese market. Looks like now, given this weekly chart, without a breakout above the red line, we are probably looking at a sideways market, probably even to down. Again, we can see resistance if you take a look at the recent breakdown on the monthly. So this breakdown on the monthly somewhere here was responsible for the movement. So this breakdown brought the market, as we began 2016, brought the market lower. And what's happening is we are coming back to test that level. And right now we are showing resistance, which is not what the bulls wanted to see. So monthly charts and weekly charts do pose a little bit of a visual problem. Without breaking out above this line of resistance on the monthly, without a weekly price breakout, again, the monthly chart right now is suggesting that the equation is shifting to a market that continues to want to pull back. Take a look at the Japanese market, and we can see ever since this crossover between the 13-week moving average, moving above the 34-week moving average, market's been acting very well. There was also a breakout above this weekly closing high, And ever since that breakout also, this market has been acting well. If you take a look at the daily, you can see that as long as the daily RSI is holding above 69.1, don't expect a pullback in the near future, or at least here around here. So as long as market is above 69.1, expect strength. And if the market does drop back below 69.1, that might set the stage for a little bit of a pullback. So short term, anything above 69.1 is a sign of strength. Anything trading above that level is bullish, and resistance around here and rejection might suggest that that is when you can expect a swing trade to the downside. This week we've seen the Indian market move to the upside, closing up about 2%, and frankly not a big surprise because we were expecting support based on this line here on the weekly. It's a simple line, and we use this line because you can see once we moved above the line here, the market would go on to move higher. We came back and back tested it here with double bottom support for the lows there, which were good lows because the market would go on to move higher. So pretty much what we did here, we came back to test the same level. Looked like we were holding. If you check last weekend's video, the observation was that as long as the market is holding on this line, we can expect a recovery, and that is what we got this week. There's also another line that gave us that understanding that this could be where it could move. So this green line here is where the market bounced above the RSI, began the movement off the lows there. So we draw a line, and it was coming back to test that line also. So this recovery is pretty much well telegraphed by these two lines. So the fact that we got a bounce just makes sense. And now that we got that bounce, let's take a look at the daily for short-term direction. And so on the daily, I think the challenge now is whether it can hold above the 50 level. Why? Because this was the recent break. Now that break was good enough to bring the market lower, this break here in late September off the highs there. And since then it's been a problem. This happens to be at about RSI 50, so draw a line from there. You can see every time we get rejected on this line, the market stalls. We got rejected here again, we stalled, and now we are coming back to test this level here. So if we stall again, of course then we can expect the next swing trade to be low. If this market is strong, then it can prove itself by trading above RSI 50 and staying above it. In other words, staying above the red line. Now if you take a look at the hourly is suggesting to lean towards a short-term pullback day to day because we are making an improvement in prices there hour to hour, but we are doing that with the RSI pretty much staying around the same level. I think that negative divergence could be setting the stage for a pullback unless the market can advance way past this level and move above this resistance line on the hourly. But based on the daily chart and the hourly chart, I would say leaning towards more of a pullback unless the market can clear the resistance level on the daily chart and the hourly chart. Take a look at the Bank Nifty, and here for the coming week, if the RSI can move above 50, then that might suggest a strong week. So just keep that in mind. So if the RSI moves above 50, that's good. And also there's a reason that could be good because it would be confirming strength. Take a look at this breakout here. In fact, actually let's draw it to correspond with this breakout right there. Now that movement brought the market off the lows and moved higher. This breakout here is this week, and since then market's been higher, so we draw a line from there, which should be somewhere around there, right? You can see that we've bounced on this line once before for the lows there, and now we are bouncing on this line. So all that is needed here is for the Bank Nifty to recapture the level above RSI 50. If it can move above RSI 50, then I say the next meaningful direction here is going to be to the upside. If we take a look at the hourly for the Bank Nifty, we can see some hourly chart challenge, and it is because of this recent break in late October. that is posing a problem. So we broke down here off the highs here short term. Market would eventually drift lower. We rallied back only to come back and test the same line. You can see uniform activity above the line and back below it. So that was obviously a trap. And now we are coming here. We seem to be looking like we are forming a double top on this line. So as long as the market is unable to move above that red line, we can assume that the next swing trade for the Bank Nifty is lower. If we take a look at the South African market by way of the Dow Jones South Africa Stock Index, we can see it's up about 4-5% this past week, and we cannot pretend to be surprised because we've been watching this expecting a bounce based on support on the weekly RSI. So go back and check last weekend's video. We were expecting a bounce just because we had come back to test this line here, and this line comes back from this entry here. So this RSI movement brought the stock off the lows of early this year, middle of January, and pretty much we'd come back to test this level. So we drew a line from here. We come back over the last couple of weeks, we've hit that same line, forming a nice double bottom here and here, hence the bounce. No surprise. In fact, if you take a look at the other reason why I suspected this could be where we could get a good movement to the upside or a recovery is because you go back and take a look at off the lows here in late 08. The RSI moved above this range, and this is 10-year weekly chart. We moved off the lows here. Of course, the market has gone on to record substantially higher levels. So we draw a line from this ideal entry, and you can see that since then, this was support area in middle of 2011. Again, we come here. All these have been short-term lows. Double bottom here for the lows of 2016, and now double bottom again, suggesting that it makes sense week to week for this market to eventually creep to the upside. Now this is not without challenge, because if you take a look at the daily chart, just like we saw with the Indian market, coming back now to test this recent break. Now that break brought the market off recent highs, as you can see here, off the highs there. So pretty much we are coming back to test that level. If we are unable to move above this line, that creates a problem. Why? Because the last couple of times we've been here and being rejected, the market would drift lower. Even this here was close enough. Market drifted lower. Rejection above the line and around RSI 50, market drifted lower. Same thing here, market drifted lower. We are coming back to test this level. So another resistance confirmation here, and we can expect the market to move lower. Otherwise, if the bulls want to take control of this, they need to trade above the red line so prices can continue advancing. So this is pretty much an area to expect a pullback unless the market can clear this well-defined line of resistance. Take a look at the French market. After spending many weeks and months trading within a very narrow range, as you can see, market's pretty much been stuck in this range here over the last, let's call it 4 or 5 months. Then finally this week we see the market blasting above that range, which is just what the bulls wanted to see. So that's a good movement there. Also, we see that corresponds with RSI moving above the previous resistance line. And again, as long as the RSI on the daily is holding above that 69.1 threshold, RSI above 69.1 just means that the market is still strong. Take a look at the DAX. The DAX also cleared the range that we've been watching here, sideways market, for quite about 1, 2, 3, about 4 or 5 months. Finally, we are clearing that resistance, hence this explosion in price. RSI also cleared the challenging area, and also we see that the RSI closed the week above 69.1. That's a sign of a market that could actually continue moving higher, not necessarily day to day, but over time. That breakout seems to be very well defined. Take a look at the weekly chart, and these are my weekly charts here, and you can see that again, we cleared that band of sideways action. So right here we cleared this band of sideways action. We also moved above the price wedge. So this past week was very constructive, and also we can see that the weekly RSI is doing its best to clear this area that has been a problem. So we'll see whether it can continue holding above this red line, which has been a problem since the highs, going back to this resistance here of the highs. So we'll see what will happen here, but you know, we have to allow it a chance of moving higher because it looks like it wants to break out. If it can continue just adding on here, we can see that over time we should see higher prices. And also we can take a look at the FTSE for guidance. We see that it found support where we were expecting support. RSI lows line came into play. We got a nice double bottom here on that line. Also, it is bouncing very nicely at the RSI 50 level. You can see we bounced below 50, back above it with uniform action for the lows there, and here double bottom support with uniform action, which might be explaining why we are seeing this nice move. What the bulls want to see though is a breakout above the recent weekly closing high, because a breakout would free the market to record substantially higher levels. So the level to watch here is if the market can move above 7,044.36, which is 2016's weekly closing high. Now, because the market has found good support here, it would make sense over time, not necessarily in the new week, but over time it would make sense that eventually we record some breakout attempt, if not a confirmed move to new highs. So because of the success of this support here at RSI 50, generally what that means is the market is going to have to record fresh highs. At the same time, on the monthly, what the bulls want to see here is a breakout above the current all-time monthly closing high, and that level to watch there is any movement above 6984.43 would be a bullish move. So if the market can clear that previous all-time monthly closing high, that would be great for market bulls. Otherwise, failure to break out on the monthly might suggest that the market has run out of momentum. And we can see that there's a possibility that this could actually be an area where the market stalls, or it needs to contend with resistance here. Just draw a line connecting recent RSI highs, and you see that it creates a nice straight line. That is where it closed on Friday. So I would suspect that if it cannot clear this topside resistance on the daily, then the next short-term direction is down. Also, this area is where it stalled recently. As you can see, we stalled here. In fact, let's go to the stall off the high. So we stalled here off in price, which is this RSI break. And so this break here off the highs is what is being tested right now. You can see the market did end Friday's session back to that red line, bring back the top side, and you can see that this is where you'd expect resistance and a pullback. Otherwise, if bulls can move the market above those two lines, then we can continue adding on to the recent gain. So either resistance and we get the next swing trade being down, or at least to the downside, or the market can clear this resistance. So market can clear this resistance here, and if the RSI can clear that resistance, then obviously that would suggest that the market is still gonna have some more upside to continue recording. Let's take a look here at the daily for the Canadian market, and I'll try and keep this as simple as I can. It's a simple observation. What we need to watch here is if the market continues trading with the daily RSI above 69.1, the market should continue being strong. If we take a look at the Brazilian market, we can see that as long as it is holding this support line on the weekly, as long as this line is holding, we can assume that it wants to move higher. Also, as long as it is bouncing successfully back above RSI 50 as it is doing, we have to give it the benefit of the doubt. So as long as those two things are happening, support and movement back above RSI 50 on the weekly, and also support above this line, then we can assume that over time this market should grind to the upside. Now, of course, if that doesn't happen and we break below 50 and break below this support line, any type of break below this two or those two concepts might suggest that now we might change our mind and start expecting lower prices. So the weekly chart continues to be favorable, if not outright finding support and looking okay. Short term on the daily, we can see that this is where it is finding problems, and we've seen this in other markets, but we see that this is where it broke down. So we can extend that line, and we can see it broke below here in November during this drop. We haven't been back to those levels, and since then we found resistance on that red line for the highs there, and over the last 2 days we hit that line and we've been rejected. So that line does seem to indicate that until the market can move above this previous break line, until the market can move above this line of resistance, I would suspect that more than likely the Brazilian market continues to be sideways, maybe even down. We can also see evidence of this on the hourly, because the hourly is also coming back, and this is where it broke down recently. That trend break, you can even draw it there. So this trend break off the highs, since then it's been resistance. So let me draw that. It's been resistance, just draw it there. You can see ever since that break here, market's been struggling to move above this red line. Resistance here for the highs there, resistance here for those highs, resistance here for the highs there. Again, this is double top resistance for the highs here. So hourlies and dailies continue to point to a market that should be sideways to down, unless the market can clear the well-defined resistance here on the daily, and also unless the Brazilian market can clear the previous daily resistance line. So unless the market can clear this line of resistance here, that has been a problem there, problem here, problem there. Unless the market can clear that line, we can assume that this is a market that net, in my opinion, should be setting to trend lower as far as resistance continues on the daily and the hourly. Otherwise, if it can clear the resistance lines discussed here, then we can expect the market to continue grinding to the upside. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. ESS.